Welcome, foreign trade champions. Let's grow together. Recently, I uploaded a video on risk management in foreign trade right here on this channel. This video is part of a series with the other video focusing on payment terms in international trade. To make it more listener-friendly and ensure the key points are clear, I have re-recorded and uploaded the same content today. In addition, once you've comfortably watched the video, you can download the presentation as a PDF file from the description and comments. If any questions come up while going through the PDF, feel free to leave a comment. I'm here to help. We're about to explore a landscape filled with opportunities and challenges, where every decision and deal plays a crucial role in shaping success or failure. In the world of international trade, each shipment and transaction is a balancing act between potential gains and risks. But here's the good news. Mastering these risks isn't just about survival. It's about unlocking your full potential in a rapidly changing global market. With effective risk management, you can navigate these complexities with confidence and turn uncertainty into opportunity. So let's embark on this journey together and uncover the secrets to thriving in the world of foreign trade. Okay, let's get started. In the world of foreign trade, where opportunities span the globe, every reward comes with a risk. Sometimes hidden, sometimes blatant, but always a challenge. Today, we'll explore how to navigate and hedge these risks with the precision of a seasoned explorer navigating uncharted waters. So, let's dive into risk management in foreign trade. Let me remind you, start by watching the video at your own pace, then download the presentation in PDF format from the links in the description or comments. Take your time to review it thoroughly. I believe it will provide even more value. Imagine you're selling goods to a buyer halfway around the world. How can you be sure they'll pay you back? Please consider to enter trade credit insurance, a tool that protects businesses from the looming specter of non-payment. Whether you're dealing with one client or many, this type of insurance safeguards your cash flow. It's like having a safety net for your transactions, making sure you don't fall if a buyer defaults, goes bankrupt, or faces political unrest. Think of it as a security blanket for your accounts receivable. Next, we have factoring and forfaiting, both tools for converting future payments into today's cash. Factoring allows you to sell your invoices to a third party, giving you immediate liquidity. It's short-term for the day-to-day, a quick fix for fast-moving business. Forfaiting, on the other hand, is for the long haul, designed for high-value international transactions. Both methods offload the risk to someone else, allowing you to focus on growing your business rather than chasing payments. Factoring may be with or without recourse, meaning the factor can or cannot seek payment from the seller if the buyer defaults, while the forfaiter buys the receivables without recourse to the exporter, assuming all risks, including credit risk and political risk. In foreign trade, the world's financial markets can feel like a storm on the high seas. Currencies fluctuating, interest rates changing, commodity prices bouncing up and down. How do you stay anchored amidst all this chaos? Hedging instruments like forwards, futures, options, and swaps are your tools. Forwards is contracts to buy or sell a specific amount of a currency or commodity at a predetermined price on a future date. Forwards are private, customizable agreements, whereas futures are standardized contracts traded on organized exchanges. Next, options give businesses the right, but not the obligation, to buy or sell a commodity, currency, or other financial asset at a predetermined price within a specified period. The primary risk associated with options is the premium cost. When purchasing an option, the buyer must pay an upfront fee called the premium, which secures the right, but not the obligation, to buy or sell an asset at a predetermined price. If the option expires out of the money, means the market does not move in the buyer's favor, the business forfeits the premium paid, leading to an added expense without any financial protection or benefit. Currency exchange rates can be tricky. One day your revenue looks strong, but a slight shift in the market and suddenly you're at a loss. What do? You manage these risks through strategies like natural hedging, balancing revenues and costs in the same currency, or financial hedging, which gives you the power to fix exchange rates. Picture it as balancing on a tightrope, but with a safety line. Tools like multicurrency accounts and foreign currency loans are your stabilizers, keeping your trade on solid ground. Furthermore, companies can use currency swaps to exchange debt obligations in one currency for another, aligning liabilities with revenue streams and mitigating currency risk. Now, let's talk about cargo insurance. Shipping goods across the globe is like sending your treasure chest across treacherous seas. There are storms, thieves, and sometimes sheer bad luck. But cargo insurance helps protect against these risks, depending on the level of coverage you choose. Whether you opt for all-risk coverage, which protects against almost everything, or a more specific named perils policy, you're giving your goods a fighting chance based on the protection provided by each type of coverage. The Institute Cargo Clauses, or ICC, are a set of standardized insurance terms used in international trade to determine the level of coverage for goods during transit. There are three main types. First, ICCA offers all risks coverage, which is the most comprehensive. It covers almost all risks of loss or damage, except for specific exclusions like war or strikes. Next, ICC-B provides intermediate coverage, which is more limited and covers only named risks, such as fire, explosion, or the sinking of a vessel. However, it doesn't cover things like theft or non-delivery. Finally, ICCC is the most basic form, covering major catastrophic events. Think fire, explosion, or a ship capsizing. It's the least extensive option, but still offers protection against the most serious incidents. Let's look at two recent examples that really show why cargo insurance is so important in international trade. These cases demonstrate how unpredictable events, whether accidents or natural disasters, can lead to massive losses, making cargo insurance essential for managing these risks. First, the Given Suez Canal Incident in 2021. The container ship Given blocked the Suez Canal for 6 days, which caused major delays in global trade. Hundreds of ships were stuck, and many shipments were delayed. Some perishable goods spoiled, while other cargo missed critical deadlines, leading to financial losses for both importers and exporters. Cargo insurance played a crucial role in covering the loss of goods and the additional costs caused by these delays. Without it, many businesses would have faced serious financial setbacks. Before that, there was the Beirut Port Explosion in 2020. A massive explosion destroyed thousands of tons of cargo stored at the port. Many businesses lost entire shipments of goods, from food supplies to construction materials. Companies that had cargo insurance were able to recover their losses through claims, which helped them rebuild and keep operating. On the other hand, those without insurance faced major financial struggles and significant disruptions to their supply chains. So, what have we learned? Risk management isn't just about avoiding problems. It's about being proactive, identifying challenges before they hit, and having the right tools to address them. Whether it's credit insurance, hedging, or cargo protection, the key is to customize these solutions to fit each specific needs. And like the universe itself, risk management is a constant, evolving process. You don't just set it and forget it. You adapt, refine, and improve. Because in foreign trade, as in life, the only constant is change. Thank you for joining me on this journey through the complexities of risk management in foreign trade. Together, with these tools and techniques, we can not only survive in global markets, we can thrive. I'm On Tact Mind, bringing you valuable insights on international trade. You've been watching Trade Wins Today, your go-to channel for all things related to global business. And I look forward to seeing you again soon with more informative content.